Apple stock is currently underperforming the overall stock market on a year-to-date basis as well as a yearly basis. If you look at year-to-date, it's down 11% versus the S&P 500 being up 8%. So in this video, I want to talk about what may be going on and causing the pressure to the downside for Apple stock, how I view the valuation, and where I might be interested in buying more Apple. I believe the reason that Apple has been struggling, or part of the reason, not entirely, the weakness that we're seeing out of China does have an impact, and a bigger impact to a company like Apple because they're so global. If you didn't know, Apple has around 20% of their global sales coming from China. After 2020, they saw a giant spike in sales coming out of that region, and then the sales kind of tapered off. The growth is slowing down there, and there was actually an article that came out earlier this week from Counterpoint Research showing that 24% fewer iPhones in China are being bought versus last year in the first 6 weeks of this year. The second part, and I've been talking about this probably for the past year, is just overall valuation. If you look at their PE ratio, it's actually in the lower 30s for a little bit when it was trading close to 190, 200. And for a company that isn't necessarily expecting a ton of growth, if you're looking at estimates for the next 5 years, growing revenue at a 6% compounded annual growth rate and a PE of 26, how I view Apple is no longer an innovation mega growth story. I view Apple kind of like I view Coca-Cola, PepsiCo. It's kind of becoming just a cash cow. And so what premium do you want to put on that cash cow? For a while, a 30 PE maybe made sense. There's a little bit more upside. There was hope around AI, maybe further growth. But honestly, it just seems like the company is kind of churning out products and just revising the old products. They're not really coming out with anything new. You can talk about the Apple Vision Pro, but that's in early stages. I guess it could catch on and do really well. I don't necessarily see the appeal to it at its current stage. If they improved it drastically, maybe my opinion could change on that. So the PE coming down to like 26 and even like the lower 20 range, I think is a decent spot to pick it up, kind of close to fair value. Fair value being around like 160 to 165 makes sense. If it came down to like 120, 130, P ratio around 20, I think it's a pretty good grab just from the perspective of it just being a giant cash cow. I don't see Apple going away. People are hooked into the ecosystem. Their service revenues are growing where the device revenues are maybe falling slightly, but the margins are higher for services. The EPS can continue to grow even if the top line doesn't. I don't think Apple's going to crash, go from 170 to $80. I don't think that makes sense. And then just a quick update on the public portfolio, currently at 86,537. Also, if you did want to get the newsletter that's sent out every week for free, check out my link in my bio. You can sign up for the newsletter completely free, join 500 other people. Thanks guys for watching, and have a great day.